Where are we now on trend? Did the trend get blown up here in the last 2 weeks?
No, I don't think so. But let's put a couple things in perspective. We just had a 25% rally in
Melt up.
4 months. I'm not sure I would go to the melt-up language. We're unchanged for the last 16 months, right? But in the context of a 25% rally, we've had a 2-week pause with the market down 4.5%.
Terrible.
I think it's early to say we're through this corrective phase. But as far as disrupting the trend, I think the trend here is still up. This is a normal corrective phase in what we think is the beginning of a new bull market after a very difficult 2018.
This is so important, folks, what we're discussing here right now. Let's bring up the chart. I've shown it a million times. Frankly, this could be chart of the year. Correction in February, we got there. Bear market, no. In October, correction, bear market, yeah, we got there for a cup of coffee. Here's the great melt up, and we've barely rolled over. How do you take your economics and synthesize this back to Mike Wilson's calls in the equity market, which have been newsmaking and controversial?
Yeah, absolutely. I think Mike Wilson's point is essentially based on the fact that U.S. is in late cycle. You are already seeing cost pressures, and these trade tensions don't help. Tariffs are going to further hit margins, and so that's essentially what is informing his view that he's not confident that earnings will be good going forward. But from global perspective, I think the story was really in the rest of the world, that you had support from China coming in through. We were expecting Europe and Japan also to do better, but this trade tension story is really taking away that sting out of that global growth recovery story that we were having.